mean, we are beginning to compete with all sorts of capital sources, and obviously this is the herd instinct, flight to sort of the growth markets, the safe havens. Yes, there is certainly sources there, although there are also limitations, because if you just think what happened to the BRICS states, I mean, that story is of course not quite the same anymore, and I've just traveled on RICS business to India. And I will go to Brazil as well, and this is doom and gloom in Brazil, definitely, given the political instability or but there's actually stability there, because that lady won't move, and therefore it's actually pretty shaky in terms of the economy. And also India faces its challenges. I don't think it's going to distort the picture overly. I think, as Johnny said, it's going to be the North American money, it's going to be the sovereign wealth funds. And if the Norwegians have a bit of an oil price shock, I mean, they still have so much cash. I mean, you know, if you have a transaction, a core deal, if it's oversubscribed in Manhattan, for example, 14 times, and suddenly interest rates change a little bit, and sort of in half a year's time, that same deal would be oversubscribed only 12 times. Wow, that's going to make a big difference to cap rates, is it? I mean, there's so much capital around, so these sources will come into play, are coming into play, but they don't distort the picture much further.
Okay, but I think just on that capital's not competing for everything, and I think that's probably the difference. One of the things, you go back to 2007, or the peak of the last cycle, that, you know, people could find a reason to buy anything. And I think today, you know, as we get involved in different projects, for core in great locations with great, fundamentals, then yes, you're getting that kind of competition. But it is not that deep, not as deep as you think for, more risky assets. And I think that, the key CBDs we've talked about, they don't reflect the whole of Europe. I think there is, perhaps a little more weakness out there in the markets, that, you haven't seen corporate activity, you haven't seen the sort of the general trends of growth in the economies that people, have been looking for. So it's really focused around certain locations.